I'm building a seven-figure-a-year real estate business, and I'm doing all the work in public. I'm giving you a daily update on this channel of my progress. So, by extension, you can learn some of these ideas, these principles, and see the reality of what it's like to actually run a business. And we start each one of these by answering questions in our YouTube channel and on the Skool page. So, you're here watching the daily update channel, which is growing a little bit. We've had a couple of growth in the last couple of days. I'll do an update on that status later on. And then we also do, and if you're not familiar with me, I also have a brand new channel, kind of the main channel where I'm doing longer form videos where I'm explaining this content even deeper. And I answer your questions on the community tab. So if you have a question, go ahead and drop it on the video right here. And then in the future, a day or so from now, I will answer this question for you live. So Harvey asks, how would you refi the 5-unit property, which was discussed in the previous video? So in this case, what we're doing here is we're looking at a 5-unit property that one of our clients in Kansas has under contract, and he's going to buy this thing for $63,000. And so the best way to show this to you is by jumping over here and taking a look at this fiveplex that it needs a bunch of work. And we forecasted that it has the net operating income, NOI, of 24K. And if we assume that has about an 8% cap rate, then it's worth about $300,000. Okay. So he's buying it for 63, and then we're estimating that he's going to have to put another, say, 100K of rehab in it to it. So when you're doing the Burr method, the buy, rehab, rent, refi, and repeat, what Harvey's asking about is this refi. We refi as soon as possible. And so what's happening is you buy it for well under its future value for cash or a hard money loan, 63,000, plus you put another 100K, 80, 100K of rehab into the property because several of these units are down to the studs. So you have to have 3 units, and we're being really generous with the 300K. And so you're into it, let's call it, you're into it for 160K or so, and then you're going to refi it for, 70, 80% of your 300K number. So you could certainly pay all this back, plus perhaps even pull some cash out if your DSCR lender would allow it. Some do, some don't. So basically, you want to do this as soon as this lender, your new long-term lender, will allow you. And these DSCR, these asset-based lenders, are prevalent right now, and you're going to pay about a 7 to 8% interest rate in today's market. And it can be a really good deal, and you could still cash flow on this property because there's so much cash flow and you're buying it at such a good rate. Some DSCR lenders will require you to have a seasoning of 6 months or a year of rentals. Some will just see that it's been rehabbed and see your current rent. If you have a lease in place, once you get the lease signed, then you're eligible to go ahead and do that. All right, let's come over here to the Skool community and answer some of these questions. Okay, here's one where Brett asked a question about he sent in a LOI, a letter of intent, and the response from the realtor was, "Hey, Brett, the LOI you are presenting does not adhere to the contract sale written approved by the Bar Association. And after consultation with the seller's attorney regarding your terms, we were requesting that you send a formal offer be made through the submission of the approval." So basically, they're like, send us a PSA, purchase and sale contract, that's compliant with this format. We don't want to just mess with an LOI. And so I think that's kind of a very surprising answer. And I just didn't understand what was happening. And my response even was, this was ridiculous. But later on, I heard some more details here where Brett explained that the realtor said this is a residential property, not a commercial property. So this is a 1 to 4 unit, and there are some different conventions that are being used. You're usually working with a residential agent, and they typically have much more rigid ways of approaching it because they're used to working with consumers, and all these rules that they must follow are written around protecting consumers. And so it's a very different environment. The fundamental concept of what you're doing is fine. It's still normal. It's still, sitting out, having conversations and making offers and sending LOIs are still fine. but they just like to follow things the way they're used to following things because they have all these compliance issues that they have to make sure and adhere to in a way that a commercial broker doesn't have to worry about as much. So I'm a little bit more understanding of the situation. And so in this case, what I would probably do is I would say, gotcha, you want a purchase and sale agreement. And she was now pushing him to go get a an agent to represent him. And so that's super common for both a buyer and a seller in a residential situation, a single family house, your personal residence, to have both a buyer and a seller's agent involved. And I find that I don't need that. In fact, having a buyer's agent for me on my investment properties, I find kind of gets in the way. Like they're not actually solving any problems for me. I understand my business way better than they do because I know how I run my numbers. And I've done lots of transactions. And so I don't need someone to protect me from, you know, like the process. Whereas when you're buying your own personal residence, that's the only property that you've bought probably ever, or maybe one or two or three times you've ever bought a property, and you don't know the process. And so having a professional who has a license that knows how to walk you through the process is completely reasonable. I don't want that because I find that gets in the way of my investment strategies. And so several realtors have suggested that he get an agent. And if he finds it easier to get it done because there's an agent representing him, fine. As a developing investor, you don't need an agent to represent you to buy residential property in New York State. I mean, like you don't need someone to walk you through the process of filling out a purchase and sale agreement. Now, that's something that we're very comfortable doing as investors. But do what's comfortable to you. There's nothing wrong with having an agent involved. You can even try it once and just see if it makes sense for you. Okay, here's another one from Brett that I think is interesting. So, as a listing agent, my fiduciary responsibilities are limited. So, Brett reached out to a realtor regarding a property on August 1st, and then several weeks later, he reached back out to her and saying, "Hey, is this property still available? I see it's on the market. Where would the seller be willing to go price wise?" And for me, he thinks 234 is too high. I love this. He's doing exactly what he's supposed to be doing. So we know that the fortune's in the follow up, and you make an offer, it doesn't land. A couple weeks later, you check in. Hey, I noticed it's still on the market. Are you willing to adjust? Since this price is only 234, I assume this is probably also a residential grade property, 1 to 4 units, and this is a residential agent who is just kind of throwing the book at him. She's being nice about it, but she's saying, "Hey, thanks for your interest. My fiduciary responsibilities are limited as far as price goes." Well, what I wish she would do is she would get on the call with her seller and say, "Hey, we have somebody coming back around. If you really want to sell this property, they'd be willing to entertain something else. What would you be willing to accept?" And if they said, "Well, you know what, if they can bring me something for 225, I would take it and be happy with it." And then she could come back to Brett and say, "I talked to my seller, and she should only do this if the seller approves, but the seller has said that they would accept 225. If you can put that together, then we got a deal." Like that's how an agent, I think, should be going about making deals happen. I used to be an agent. I know what the rules and compliance things are. And I think sometimes agents hide behind all these rules to not do anything. And you still shouldn't do anything that your agent hasn't approved, but you can get on the phone with your seller and say, like, "Hey, do you want to get a deal done? We have someone on the hook here. Like, how can we make a deal?" Because you don't get paid unless the transaction happens. So you want to help the transaction happen. You don't want to coerce anybody. That's not the angle here, but like make it happen. And this agent is unintentionally getting in the way and hiding behind the fact of, "I have a fiduciary responsibility." Yes, you do. And yes, you should follow it. But you also have a responsibility for trying to get the deal done. And that's what a good agent does. Now, it's possible he could get on the phone with her and she would do that all verbally, but she won't do it in writing. So sometimes they're careful about that because they don't want to be construed as, not following all the rules that they are legitimately supposed to follow. And so they will do it on the phone, but they don't want any kind of like written testimony that they can be used against them because they do have a real estate commission that is typically pretty strict, and they have a lot of legitimate things to follow, a lot of compliance issues, and a lot of adherence. Okay, here's a question from Joseph about earnest money. And so if you're not familiar with what earnest money deposit is, it's when you buy a property, you put it under contract, when you submit your purchase and sale agreement, there's an amount called your earnest money deposit, which is basically kind of like your holding money, your deposit for taking the property off the market. And in many times that initial deposit is refundable. And in the residential space, it might be 500 to $1,000. In the commercial space, it's usually a percentage of the purchase price. And there's no rule that says it must be that. It's just common practice. And 1 to 2% is pretty common. That's what Peter says here, is it's often 1 to 2%. We like to negotiate a two-part earnest money deposit where we take 1% of whatever the purchase price is, cut that in half. So for $1 million property, 1% of that is $10,000. We will put a $5,000 deposit up front where it is refundable during our due diligence period. So after say 45 days, then after 45 days, we put in another 5,000, which becomes non-refundable. At that point, we're kind of in it. And if we don't close on the property, then we lose our earnest money deposit. And so to say just $50,000 is high or low, it depends entirely on the size of the property. For a $1 million property, that might be high. For a $100 million property, it's really low. But our lesson here is we want to negotiate as little in as possible because we're making multiple offers. And a lot of times we have multiple deals under contract and we don't want to spread our money out too thinly. We want to put as little money down as possible. So if something doesn't go right, we risk losing the least amount of money. All right, that is questions answered. Now let's talk about building and strategizing in public. So let's check out this website. I have my draft in. All right, here we go. So here is the first draft of the website that I had somebody build for us. So, pretty basic, just kind of the kind of things we buy. Click this link here. It takes you to a place to fill out a form. It has a home and about, so really basic. It has a little bit about us, who the people are. Yep. I mean, like the most basic website ever. And I think that's all you really need. You don't need to be too fancy here. This looks like a real business. And so when someone looks you up, the internet sleuths you and they figure out what you're about, you have something that looks legitimate and not like either no website or like a Gmail account. And so this is just a credibility kit. And then I probably will add a couple of things to this over time, but for now, this is completely legitimate. That works for me. First draft is complete. And so we're working on this RV park in Texas. And one of the things that we're coming across is this is a kind of what we might consider a man camp. It's a workforce housing, and it's not really a recreational housing. And so there's a bit of a debate amongst RV park buyers is which one of those scenarios is more stable. Is it the man camp, or is it the nightly, weekly stay RV folks that are just there for vacations? And is that centered around a destination or a vacation spot? And so I think there's probably a lot more seasonality in the recreational, whereas like in the wintertime, it may not be as popular for people to attend. Whereas in the summer times around events, it might be packed. Whereas with a man camp, it's probably full a lot and you have much longer rentals, which means there's less management headache. But then you risk the idea of, okay, where is the jobs coming from? And if that source of jobs in the area goes away, then what do? Then you might be in a situation where you have no demand for your RV park at all. And so that would be the flip side, the risk of a workforce housing, or also referred to as a man camp. And so in this case, we are talking to a capital partner who is asking us questions like that, and we're providing the data around the facts. And here's an important thing. Don't try and sell something that it is what it isn't. Like, I'm not trying to convince somebody this is not a man camp. This is not a workforce housing / affordable housing play. I'm not trying to convince them it's recreational, because there's just the data doesn't back that up. And so just state the facts. And if they're not interested, no hard feelings. This is not a fit for you. We look for somebody else who is a fit. Okay. Here's also an exciting development. We have this 8-unit that's in Louisiana, and we have a signed purchase and sale agreement. And this has amazing owner financing terms. It's a really strong deal, and it's one of our clients has under contract. And so I signed a JV agreement with him to help him find a capital partner. And so we are going to go in together, and we'll be kind of like partners in the deal together. And then when we buy it, we'll have another asset to work on. And we don't have any new news here on this RV park, this 50 unit in Texas. The seller is still being a little bit cantankerous with us and hasn't really given us what we want. And so we're just raising our capital partners kind of independent of it being under contract, which makes it a little bit harder. But we're still getting some people who are expressing some interest and being a part of a project that we're working on. And then when that project is specific, we can give them details. And lastly, on the updates here, so I have a portfolio of single family properties in Arkansas that I'm selling, and I've just closed last week on this small single family property that I bought. Oh gosh, I don't know how many years ago. And I am waiting for the wire to come in. And so here's a really important thing to note about this business is you tend to get big lumps of cash when you sell properties or you do an assignment or whatever. And it can be nice to get this big lump of cash, but you can't really count on that being at a time and place where you're really expecting it. And so we closed Friday. I expected everything to happen. They had some sort of issue with the deposits that they weren't communicated well. And so now it's the next week and we're waiting for someone to sign a document. I've had to re-sign documents 2 or 3 different times. And it's like all over a matter of $500. Like I would have just rather just have paid the $500 and gotten my wire sooner because I want to use that additional capital that I have on other projects. And I have other projects that are waiting on me to redeploy this capital. And so now I'm waiting on this like very minor kind of nitpicky but yet important paperwork kind of stuff that I find frustrating. And so this is a business that's very heavy on paperwork. And just be aware that don't count your chickens before they hatch because that money is not real until that wire or that check is in your hand and you put the wire into your bank account and you see the money post. That's when the money is real. And I'm still waiting on a quote for the repair of this property because it's like listed. I'm waiting for pictures to be taken. So I actually need to take a note here as I need to follow up on the pics because I don't know if they've been taken or not. And so it hasn't been listed yet, even though I thought it was. It actually isn't because they're waiting on pictures. And I need to get a quote for the tree because the neighbor has a problem with the tree. Okay, let's do a quick update on the brand stats. So as of today, how are we looking on our subs? So in this case, we're doing, I think we got a few more, 1,084. So yeah, a little bit of growth there. Not bad. How about the daily channel? So, or the main channel actually went up a little bit as well. Yeah. So it's looks like, I wonder if these are just the same people who subscribe to both. That's interesting. And then I don't think there's been any motion on Instagram. I need to get a little better strategy because I'm not really, whatever I'm doing over there now is not moving the needle really at all. So we actually had a suggestion to start making a post on Instagram about what I'm doing on YouTube to see if that makes anything happen. The Skool group is growing nicely. So last I checked, it had really jumped up. So 32, 38. And so this is just a little bit of get 1% better every day kind of a thing. So where that growth there over the last week has been, almost over 100 people. Really nothing on Instagram. No growth happened here until boom, over the weekend, it jumped up. And then this has been pretty steady over here where I've been making almost no post. I've done nothing over here at all, and that's growing. So, sometimes you just don't know what you're doing. So if you haven't already, go back and watch some of the previous daily updates on some of the things I'm doing. I have some really good examples of how I analyze deals. So make sure and go out there and check that out.